What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay guys, Jay Martin here, CEO of Cambridge House, and I am joined right now by an exciting new copper opportunity. And one of my guests is familiar, Mr. Mark O'Day, the executive chairman of Northwest Copper. He's been on the show several times with Pure Gold. And I'd like to welcome Peter Bell, the president of Northwest Copper, to the show for the first time. It's great to see you both.
Hey, Jay, good to be here again.
Okay, well, I'm excited to jump into this, and there's a handful of buckets that I want to talk about when it comes to this story because there's lots going on. I think timing's excellent. I'm very curious about, I will start with you, Mark. You know, this is the merger, right? This is what Northwest is. It's the merger of Sun Metals and Serengeti Resources in British Columbia, Canada. And so I want to start there with what struck you about this merger and why you decided to execute on this right now.
Well, we can start thematically. So thematically, copper is having its day in the sun. You know, from a supply demand side of things, the supply side's down, it's under pressure. The demand side of things is growing, driven by a whole bunch of things globally, including, the whole sort of clean energy movement, but just the general modernization of economies and countries, et cetera. So that isn't slowing down, and it's creating a huge opportunity for mining companies that are focused on copper. So thematically, that's important. We think we got the timing right for the merger. And the other theme that we always focus on is location. So good projects in good places has been our mantra for the past 20 years. And BC is definitely emerging or has emerged as a fantastic place to look for, mine, develop copper gold projects in the North American setting. So what we put together here at Northwest is a combination of two, what were previously essentially single asset companies. They had a bit of a pipeline behind them, but on a combined basis, we've created a fully diversified, BC focused, tier one focused, copper gold explorer developer that provides a whole bunch of additional optionality and excitement combined than either company really provided on their own. So, we think this is synergy at work, right? This is truly, the whole is greater than the sum of the parts here. And we're giving investors an opportunity to win on a bunch of different projects that range from early stage grassroots discoveries that, projects that have never been drilled before, like East Niv, that have big outcropping ore grade mineralization, to much more advanced projects like the combined Stardust and Quenica asset that really underpins the value of the company on a pounds and ounces in the ground basis.
Okay. And, just for context, I talk so frequently on this show about following the best people, and you touched on your 20-year track record. You've delivered on this narrative, exploration through to development and operation in the gold sector, in the silver sector. Here we are in the copper space. And everybody who watches my channel is pretty up to speed on the high level macro trends that are fueling all the, the demand. I mean, the supply demand economics have probably never looked better, never in my lifetime anyways. Peter, I want to move to you because I'm really curious about what struck your attention. A little bit about Peter's background, over a decade at Newmont Corporation, 10 years managing money in London, 3 years at National Bank in Toronto. You've looked at thousands of mining deals in your career. And a number of marks, as you guys shared before I hit record. And so, why did you jump now? What about this opportunity convinced you that this is the one I'm going to change my career for?
Sure, great question. So there are a few things, as you might imagine, and one of them obviously is the opportunity to work with a group that's got a great track record. So working with Mark was kind of a no-brainer and part of the whole thing. In terms of the timing, the copper macro is very supportive. There's a lot of tailwinds behind the copper price, but also just thinking about copper development stories, we we in banking, and certainly when I was on the buy side, were always aware of the limited number of copper development stories. And unlike the gold space, there are lots of them in gold. There are many fewer in copper for lots of reasons. And one of them is that copper projects, most of them are kind of big company games. So they require a lot more money than small companies can generally put together. So a lot of companies make a big discovery and they end up with a project that's much bigger than what they could possibly build. And then that puts the shareholders and the management in a bit of a bind because all you can do is keep studying it and hope that someone buys you. So one of the things that was drilled into me when I was on the buy side by my partner there, a guy called Mike Humphreys at Polygon, was always make sure you've got multiple ways to make money in an investment. And if you're in a company like this one, the opportunity here comes from obviously growing the company and hoping for a takeout. That's a great outcome. But here, because we got the high grade from Stardust, so Stardust is 5 times higher than the average BC copper deposit in terms of grade, and the higher grade part of Conica, when you put those together, you have an opportunity to scale a project to a level that we could actually finance and build ourselves. So we've got a second exit there, and that is hugely powerful. It's powerful from a takeout angle. It's powerful from a build and kind of realize that cash flow at some point, but it puts us in control. And that ability to control the outcome was one of the major things that attracted me to coming and joining the group.
Yeah, I think that's such an important thing to hear from the CEO at the jump in a copper story, because so frequently I'll speak with retail investors who are looking at copper stories with the same lens that they look at gold stories. And you touched on so many important points regarding why that's a mistake. Namely, the exit strategies are just far more limited, right? You've got an economic gold deposit. There's hundreds of suitors that might look at you as an acquisition from small caps, mid-tiers, and majors. Alternatively, it's feasible that you could raise the cash and build the mine yourself. In the copper business, that's far less likely. And what is there? Maybe half a dozen suitors that would actually look seriously for acquisitions.
Yeah. Yeah, so it's it's been a buyer's market even in a limited a supply constrained kind of time, because first of all, when you buy these things, that can be expensive, but then whoever the acquirer is then has to come up with billions of dollars to put it into production, and that that scares people away, quite frankly. Right. And so, we always hear the same 3 things when I call them like the investment gurus that I have on this show, the Warren Irwins, the Rick Rules, whoever you want to call out. When you're looking at copper, what do you look for? And it's always scale, grade, and an angle, right? And so we touched on the angle a little bit. You also touched on grade. And so I want to dive into that a bit further because it is notable. As you said, 5 times higher. It's the Stardust deposit that came from Sun Metals, 5 times higher than the average copper grade in British Columbia. So catch my audience up to speed on the deposits, Stardust and Conica, which are the gems we're going to start with Northwest. Sure. So Stardust is a carbonate replacement deposit. It's a structurally controlled deposit, so narrower, a little bit smaller, massive sulfide with very high grade, good continuity. It's an underground mine. This is beautifully set up for underground mining, for long hole stoping, very simple, straightforward mining method. So this, this deposit is kind of, as from a mining point of view, from an underground mining point of view, incredibly straightforward. And that grade, sweetens the copper production and the cash flow in the future. And that combination of that grade with the scale of what Conica has really makes for a unique and interesting combination, because, there are high grade deposits around, but they tend not to sit right next to a big porphyry copper gold deposit. We're talking 7 kilometers away. So it's incredible that nature allowed, those 2 deposits to be as close together as they are. If you look at Conica is a pretty interesting deposit in its own right. So it's got, a few 100 million tons of kind of typical BC grades, but at the same time, it's got a very distinct high grade zone that can be mined separately or on its own if that's the way that we choose to proceed. And it's geometry is such that that high grade is early in the mine life. So any potential mine life we would have, we would be able to get to that higher grade very early on. So, talking about the angle, the angle here is this is a copper deposit, copper gold deposit that has a cash flow profile that's more like a gold deposit. So it's, you get your money back sooner, it costs less to build, and, you don't wait around for years and years and years to get the payback. So it's a pretty unique combination of deposits.
And just to quantify a little bit on the grade, we just published a resource on Stardust. So we post-merger, two of the deliverables that we said we were going to serve up to the world was a first metallurgical study on Stardust and a first ever sort of holistic resource on Stardust. So the MET came out incredibly positive, well in the sort of low to high 90s on both copper and gold. So very, very metallurgically favorable. And the resource that we just published came in just under, in all categories, just under 8 million tons, sort of 8 million tons of 2% copper equivalent. So we're talking, the world is awash with, 0.3 to 0.5 copper deposits. And we're looking at a deposit here, a massive sulfide copper gold deposit that's running 2% copper equivalent with much, much higher domains within that sort of 2% equivalent envelope. And Quinnica is sitting right next door, as Peter described, that in and of itself has got amazing zones of continuity that are running hundreds of meters of well north of 1% copper equivalent. So very peculiar and unusual for a BC porphyry is this high-grade core, but it lends itself to a beautiful combination with the high-grade Stardust deposit right next door. So we think we're very uniquely positioned to demonstrate what this synergy looks like when you combine these two high-grade centers right next to each other into a combined development project.
And just to be clear, I just want, because I know I present this quite often. It's the idea is to have one central processing plant and have both projects feed into that central plant. So that's the scenario that applies to the two deposits.
Okay. Now, I know one question that I'm going to get, given this project is in British Columbia, Canada, is community partnerships and ESG initiatives. Now, Mark, I'll pass it back to you because you've been doing this enough times. You've been through this with a handful of companies. So, can you touch on any initiatives that you're undertaking right now with Northwest?
So both sides of the merger came to the table with really good working relationships with the First Nation groups that were in their respective project areas. And in the case of Sun Metals and Quinnica, that is the Takla First Nation. So we have an exploration agreement in place to allow us to sort of work together and move forward and do the exploration work this year as needed. So I think both sides of the merger did a fantastic job of building community support and First Nation dialogue and agreements. So that's looking really good. And then at East Niv, we've got agreements in place as well there to conduct the 3,000 or 4,000 meters of drilling that we've got planned for that first ever drill program on that exciting new target for the summer. So we're very well positioned from an agreement point of view for this year.
Okay, thank you. Now you touched on it briefly, and I'll go to whichever Peter or Mark wants to touch on the drilling program. When we're looking at upcoming news flow, I know you're cashed up, deploying about $10 million into the ground this summer. Correct me if I'm off the mark on that. But what can we expect in terms of news flow here?
So we will start the drilling at Quinnica imminently. So we're basically ready to go anytime there. So that's this month and ASAP, and that will continue for most of the year. So we have a mix of near mine targets and actually kind of in mine in project kind of enhancement drilling within Quinnica, and then a bunch of satellite targets there. So that will be ongoing. And then East Niv is helicopter supported. So although it's close to infrastructure, there's not a road into there. So we have to fly in. That project will be, the drilling itself would be from the beginning part of July until probably sometime in October. And then news flow, assays and so on following that.
Okay. Look, I want to thank you both for introducing the story. Any last words you would like to leave my audience with before we sign off today?
Peter, you want to go first?
I really like your comments about what is important in a copper investment, and I think we touch all those things. I think this project actually, by virtue of the grade and the scale of the two, it actually provides scale. There's actually opportunity for pretty material production here, but the angle again is that combination of opportunities to realize value here, and to me that's the most important and most differentiating part of this story versus many other quite quality stories.
I'm glad you brought that up, because optionality is a key ingredient that we always look for in companies at this stage. Yeah. Mark, anything to add?
The only thing I'd add really is to circle back to something I said at the beginning, which is, this is a lot more than just a development stage project. This is a combination that has put together a true pipeline that spans the whole spectrum of the mining continuum. So you've got all of the excitement and momentum of a new discovery potential at NIV. And if we tag into something there, in our first round of drilling, all bets are off. It's going to be a huge momentum driver for the company. And all that is happening while a project that's a lot more mature is getting de-risked and sort of moved up the development curve closer and closer to production or some kind of decision in that direction. So we hope by the end of the year on Stardust and Quinnica to provide a PEA level piece of work that can demonstrate what that combined project is capable of delivering.
Okay. Okay, so we've got news to look forward to in the near term. Thank you both for coming on. I want to check in again midsummer and get you back in front of our audience and touch base and peek behind the kimono again. But thank you both for your time. I appreciate you both coming on.
Thanks, Jay. It was
Thanks,
great.
Jay.